Good morning, everybody. Welcome in. This is Michael coming to you from Gamma Edge on Thursday, November 6th with our pre-market prep session. We'll let everybody file in for a couple minutes and then we'll go ahead and get started. As always, like and subscribe on X as well as YouTube. And you'll be notified anytime we go live with any of our content. We posted a post-market review video last night. It's about 10 minutes long. Encourage everybody to check that out as we go through how we used our tools to execute throughout the day and how we navigated the SPX option structure yesterday. So we'll go ahead and jump right into it. As always, we cover our three pillars: sentiment, structure, and trend. We start with the trend, as we always want to be on the right side of the market or correct side of the market, whether it is moving up or moving down. And that's based on our market trend model. That's based on the tick index. The bolded white CT is our intraday or instantaneous cumulative tick or CT. We're still remaining below the colored ribbon here on the tick US. As you see up here, the tick US is all exchanges. This is what we kind of call our kitchen sink. It's slightly more sensitive, but it's good to watch this. And then we'll look at our quality filter tick that we use for our mechanical portfolios, entries, and exits or triggers to enter positions. So again, we did see a short-term bounce yesterday in the cumulative tick, the bolded white line, but again, we're still under the colored ribbon. So again, we're prone to failure, as we say here at Game Edge, so we could quickly roll back over under these shorter-term momentum moving averages. If we do stay above those moving averages, we want to see the cumulative tick move from lower left to upper right and start emerging outside the colored ribbon, indicating that there's more buying versus selling in the overall market. Breadth indicator yesterday, again, new lows still outpace new highs, so that's not a positive indication for stocks appreciating. And then our filter cumulative tick indicator was above the zero line, but not significant linear up that we like to see to indicate that institutions are putting significant amount of capital and money to work. So we'll continue to watch that day over day. All right, moving on to tick RC. Again, this is how we trigger our mechanical portfolios. If we're above the red and cyan, our mechanical portfolios are triggering. Those would include our P-trans to PX as well as our wheel strategy. And they are still below. The cumulative tick bolded white line is still below. And we're just touching or retesting the underside of that colored ribbon. So again, this could be an easily failure area where we start rolling back over to the downside. So we're at an inflection point. If we do start emerging outside the colored ribbon, then we start some progressive exposure to the long side. That would indicate we may be on a longer term move back up. So we'll continue to watch this and update everybody as we see the changes in the cumulative tick. So quick takeaway is obviously we're at an inflection point, possible prone to failure, move back to the downside, or we're going to start to merge through the colored ribbon with appreciation indicating more stocks are being bought than sold. All right, moving on to the SPX options complex or structure. Again, largest, most notional value. That's why we look at the SPX and we separate it with the SPXA. Again, these are our cruise ships, institutional positioning via the monthly expiries. I went ahead and turned on all expiries here. We can separate it by individual November expiry, but I just want to get an overall look. We're call dominated again, above and below spot price, on out, significantly on out in time, as you can see. So really no change there from an institutional or SPXA positioning standpoint. We see the transition level there at 68, 65 again, so that's important. I'll go ahead and flip over to the SPXA via our web app. It's very easy to see here, and I'll separate the November expiry for us to look at live. So again, call dominated above and below spot price. We maintain that 68.10 will be the top of the transition, important area to recover and stay above, and then 68.50 and 6900 to the upside. So again, institutional standpoint, call dominated, structure still continues to look strong and supportive on any pullbacks. All right, moving into the SPXP, all expiries turned on. These are our speedboats that control the kind of intraday as well as the weekly price action. We'll get into zero DTE. We did flip to call dominated on all expiries here, even though we see a significant amount of puts within the overall structure. Key area is the transition area, 68.15 to 68.20. Obviously, getting above that area and staying above will give us a little bit more better environment for price appreciation. And we see 6,900 still the target to the upside. That's where we had that larger move down from, kind of where we broke the consolidation area and moved down the downside. So we'll watch that 6,900 if we are able to push up to there. And then on the downside, we're watching 6,750 again. That was a key important inflection point 2 days ago. That's where we bounced from. So that is a key area to the downside. If we lose that, we'll be looking for 6,700. All right, moving on, the SPXP GEX ratio or gamma edge ratio, again, put call ratio, but improved as we add a time component, which is gamma. Again, we're still seeing a weak look within the put call ratio. We saw that, or sorry, the gamma edge ratio or GEX ratio. We saw that quick bounce to the upside. We talked about the possibility of a bounce yesterday. I said we were reaching an extreme, and that would be a good opportunity for a bounce in the overall market, which we saw yesterday. So that came to fruition and played out well from using our tools and our thesis from yesterday. But then now we're seeing a slight drop again in the gamma ratio, indicating that short dated call speculation is not being maintained, and the short dated put speculation may be coming back in. So again, we're at an inflection point here. We're above the one line, which gives the edge to the bulls in a call dominated look or call speculation to the upside. But we're right at that inflection point where we could go to the downside again, where the GEX ratio is 1.01, so just slightly above that one line. What you want to see is if SPXP price is appreciating, you want to see the GEX ratio obviously rising, indicating out of the money call speculation, short dated call gamma increasing, which would be supportive of prices moving higher. All right, moving on to the delta balance. We spoke about the delta balance yesterday. We were pegged down at -1. And then with the GEX ratio, we had the opportunity to bounce, which we did to the upside. We're still in a negative slope, though. The green dotted line is the right-hand plane. This is out of the money call speculation above spot price. Red dotted line is below spot price. This is the left-hand plane. Those are your out of the money puts or in the money calls. So we did see that rise above the zero line, but our delta balance, the aggregate, is still below zero and trending down on the negative side. So we have some conflicting things here with the right-hand plane as well as the left-hand plane, but they're all both in negative slopes. So again, indicating possible weakness or consolidation via price. And then our expiries on out in time, we do see that slight bump up here into the 7th, which would be Friday. And then we see a significant drop into Monday and then a slight recovery back for next week. But it's still a weakened state as we're just transitioning or traversing around that zero line with the overall structure. If you look back previously, when we're a call dominated structure, everything was above zero and the delta balance was pegged at +1, and we had positive slopes on the green and red dotted lines. But as of now, we have negative slopes and it just transitioning back and forth around the zero line. So really not a conducive structure of a long-term move back to the upside as of now. So we'll continue to watch this day over day. All right, moving on the SPXP, again, high sensitivity levels for today. It's our net stat command kind of putting those goalposts in place of where we may have some price interaction. You'll notice that left-hand plane and right-hand plane integral are pretty low today. The left-hand plane integral is actually winning within the money calls below us. So again, those could be supportive. Again, we'll be watching that intraday call versus put speculation, though, on our vol M command to see where market participants are transacting. We have in the money puts overhead at 68.65. Again, not anticipating that we move up above 68.50. Again, unless we see a large change in this overall sentiment and structure. Net charm, as long as we're above 6,800, those out of the money puts will continue to be supportive, and then 68.50 to the upside. So I think those are our key levels today. You also notice that the out of the money calls are twice the integral of the out of the money puts. So again, significant headwind overhead for price appreciation. So not really anticipating a significant move up. And the gamma levels obviously match those. And then net Vanna, you'll notice that we do have a significant opportunity if we do get above 68.50 out of the money calls, volatility drop. This would be a large gamma, or sorry, large Vanna headwind to the upside, or sorry, tailwind to the upside if we do see volatility drop. Again, not anticipating we get above 68.50 with all the other structure that's in place, but that's something to watch for heading into today. All right, 0DT for today. As I said, we're put dominated heading into today. Drunken sailor range here, as well as transition is wide, large congestion zones. We were at 68.16, 68.20 pre-market. We rejected that already, which we'll watch, or which we'll look at on our trading view chart here in a few minutes. So again, 68.50 to the upside, that would be most likely that cap on price. If we see stalling and failure there, maybe an opportunity to short. And within the overall drunken sailor, as well as the DEX and GEX transitions, can be extremely choppy. You'll notice very low exposure areas here, all the way down to 6,800, 6,805. We could pull back to there very easily. And then we'd be looking for an opportunity for a bounce to the upside, depending on what our market trend model is telling us, as well as the intraday speculation. Again, significant headwinds for moving up, so I would not expect a large move to the upside today. And again, choppiness price action within the overall transition zones would be the game plan and thesis for today. All right, let's go ahead and look at this. Drunken sailor range. We're back below 6,800 now, so a little bit weakened state. We already talked about that opportunity to pull back down into there, the possibility for a bounce. We'll be watching for a retest of the drunken sailor range, as well as the transition areas overhead for failures. These would be opportunities to short for a move back down to the downside. And then again, 0DT yesterday, as well as full expiry, 68.15, 68.20. Again, areas we've already tested and failed into the 0gex level, as well as P-trans area. So those will be important areas to watch, key levels as we head into today. So upper DS would be 68.20 or 68.35. 68.35 is DS up here. We can look at the 0DTE. I'll show you why. Sorry about that. Let me go back to 0DTE. So 0DT structure, we take the 0 point and then we roll the structure up. We could even take it at 68.30, but then we take the largest next net OI where you're going to have some interaction. That would be 68.30, 68.35. Transition area, which is PGEX, or sorry, P-trans is 68.20. That's the transition area. Drunken sailor range is this area here to around the 0 line to the downside and to the upside. So hopefully that helps there. And as always, join us at gameedge.us. Put your email in for newsletters, and you can get these delivered to you on the weekends. Go over our tools, thesis, and our strategies. So if anybody has any individual equities they want to look at, I'll be happy to pull the web app up and check those out. But TLDR is overhead, headwind for today. 68.50, not anticipating us to drive up towards that level. We're below transition and drunken sailor range. So we can state, again, market trend model below the colored ribbon. So we can state also anticipating probably some weakness to the downside. And these are key levels to watch for interaction, stalling, or recovery levels for today. So Tesla, yeah, we look at Tesla every day. Structure really doesn't change for now. Pretty well entrenched with call dominated 500, not changing. PGEX, COI above transition. PGEX for this Friday drops to 460, COI maintained at 500. PGEX, COI at 500 past this expiry. So 500 looks good to the upside. As long as the market is cooperating, obviously we know 75% of overall stocks follow the market. 75% stocks follow the overall market. So the market's going to have to cooperate for a move for Google, or for Tesla to the upside. Google still call dominated. Structure looks good. 290 to the upside above transition. PGEX, COI 290 may be a cap on price heading into Friday. Structure doesn't advance on Google past this expiry. Transition actually drops a little bit, so that is bullish. But PGEX, COI not advancing significantly. And then PGEX, COI actually drop into the end of the month. So price appreciation is probably going to be difficult on Google. 290 would be that cap to the upside that I'd be watching on Google. So hopefully that helps for that, Justin, or just Zanks. So we can flip over to SPY, look at the key gamma delta levels. We're just at the 0gex now and in trans. So again, key level, if we get below in trans, we enter a little bit and 0gex, we enter a little bit more negative structure. That would probably lead to a little bit more price depreciation and weakness. But as of now, we're bouncing at that 0gex and in trans level, and then we have P trans overhead. So those are going to be key areas to recover. So Hood and Reddit, sure. Hood, bottom of transition, call dominated, so structure supportive, but we're bottom of transition within transitions, a little bit weaker, a little bit neutral to weak status. 135 to the downside, 150 to the upside after this expiry. Transition gets very wide, so it's a little bit of uncertainty within the overall positioning, but we maintain call dominated, and 150 to the upside is PGEX and COI. So structure looks good on Hood. You're just within the overall transition area though. So Reddit call dominated on full expiry. This Friday's expiry. You're below transition. Peak X is 210. So again, not necessarily a positive look for Reddit post this Friday expiry. We do flip to call dominated, but you're within the overall transition. 210 is peak X. So that would be the upside speculation area I would watch for, but you're within the transition area. We'd like to be above transition and a little bit more favorable call dominated positive gamma structure. So how is it not a waterfall below 6,800? Isn't it all negative gamma? So good question. Good question. It is negative gamma, but you do have some in the money calls being exposed here. As you look across, this is net GEX, and you'll notice that I looked at on the net stack command. So 6,800 here, out of the money puts does add to the negative gamma, as you see here. But within the overall structure, we do have some in the money calls below us, right? So these are being exposed. So not a significant amount of out of the money puts down towards 67.50, but then that dries up fairly significantly. So you go over here and look at the call OI, see here, the call OI, but then the put OI, it is completely put dominated, but we actually have, due to the moneyness, these are in the money calls below us, and these are out of the money puts, right? So if we stay above these key levels, these will continue to degrade throughout the day as these are out of the money. So this is why our key phrase here, moneyness matters, right? So if we start capturing these negative deltas, absolutely. If we get below 67.70 and start continuing this on down and start capturing those negative deltas and gamma, then yes, we could have a significant move to the downside. But as you see right here, this is most likely going to be a stalling point, right? Because we do have some in the money calls sitting here. And these are in the money, so they're not out of the money. So again, these could be supportive into this area. Again, I'm not saying that's what's going to happen, right? But everybody wants to say as soon as you go below a certain level, you're going to have a certain waterfall event. Well, a couple things have to happen also. Intraday, you have to have out of the money put speculation continuing to drive to the downside. All of this 0DT as we head into today is already hedged, right? Anything that's on the books heading into the market on open is already hedged by money makers, dealers and market makers. Now, what is not hedged is what is happening intraday, right? So that's why we watch our vol M command and our vol D command to see what market participants are doing. Are they hedging are they opening speculation to the downside? I open a put, my book gets more negative, dealer book gets more positive. They have to sell to hedge flat, right? And that just starts this cascade event, right? And that's what we want to watch for via the intraday market speculation. Hopefully that helps, Fubar. Does that make sense? Hopefully. Yeah, I'm not saying we're not going to have a waterfall event. You see what these are large dealer adjustment bars as we move through those key levels, right? As the delta is being captured, has to be hedged, gamma, right? Whatever's happening, market participants transacting, pre-market here. Again, I'm not saying we're not going to have a waterfall event, but you know those there's some key levels within that overall structure as we move down, and they could get swamped, right? First order Greeks, we would rather call this delta edge, but we didn't, but we call it gamma edge because we look at the whole SPX option structure, right? Also remember, gamma is highest in the money, right? So that's a key area that I was just discussing there. Yes, they are significantly small, right? 100%. Yes, they are small compared to the overall structure. But I'm just saying these are areas where you could see some stalling. Everybody wants to jump on and say, oh, it's going to be a complete waterfall event to the downside. Well, these could be some areas where you see a slight bounce or a small bounce or some stalling just for a moment in time, right? Yes. But these, again, are out of the money. So as we capture those more negative deltas, the book continues to just get more negative and more negative. Positive for the dealer. They have to hedge. Yes, absolutely. 100%. Again, and that's why as the spot price moves up and down the structure, we recalculate the Greeks, right? So what we do in our Discord is we have commands where you can set the spot price and it recalculates the Greeks for you as the structure continues to move with our net stack command. So I could go in now and I could run our net stack command at 67.95, which give me just a second. I'll go ahead and do that. And we'll show you what the net stack command looks like. I'll just run it for 60. Oh, sorry. I'll just run it for 67.94, and we'll get that here in just a second, and then I'll pull it up, and you'll look and see if the Greeks have changed any because of where we're forcing the spot price via the first net stat high sensitivity command that I ran here, and we'll look at it in just a minute. So hopefully that answers your question. Yeah. Let me get this here in just a second. So. Yeah, so my anticipation is that we would see more weakness to the downside, right? But these levels, you can see these, what we call dealer adjustment bars, these are what lead to those significant changes in price. And now we're just going sideways, right? And then if we start capturing a lot of more negative delta and we see out of the money put speculation, then yeah, we could have some more dealer adjustment bars. But these are adjustment bars as the spot price moved through. These are where the dealers had to hedge. And they have no respect to anything else but to hedge flat. And that's why we get those large expansion or range bars within the overall move and structure. So hopefully that helps. All right, so here's our net stat command, our newest one. Let me drag this over for everybody. So net stat command here. So really not much changed except the charm level. Right now we're down to 67.50. So you see those out of the money puts as long as we're above that. But that's why I specifically pointed out this right-hand plane integral in the charm. This is going to be significant headwind overhead, and this is going to continue to push you down all day as those continue to decay. And then these levels here, unless we hit a level that matches or is significant, these is going to be difficult, right, to stay above and be supportive. Now you see gamma's here at 67.70, so we go below that, I would anticipate another large dealer adjustment bar to the downside. And then Vanna here, out of the money puts 67.50. That would be an area that if we got below that, I would anticipate a larger move to the downside. So hopefully that helps understanding on that. So right now we're just sitting at 67.90, roughly around there. So we'll just watch that also. And we can look at the structure and see what is located at 67.90, see if there's anything there. Go ahead and look here. So 67.90, nothing really there, right? So this 67.75, 67.80, that would be where I'd anticipate we'd start testing, and that's COTMP. That's where out of the money puts go in the money. Historically, that's an area where we see some monetization. Fear and greed component can start coming in, and then 67.70 is index level. Again, those would be areas that I'd look for some stalling and possible bounce area if we continue to traverse down via weak price action. So. All right, thanks everybody for joining us. Again, like and subscribe on X and YouTube. You'll be notified when we go live. And everybody make it a great day, manage risk, and we'll see you later.